In 1997, an investment account was created by IMS for the mother of a Seattle attorney. The account was to avoid the risk of the stock market. The account maintained a pattern of growth over the years as stocks grew or declined, and high-yield bonds grew, declined, or went sideways. Soon, IMS was investing several accounts the same way, and now more than 80 accounts are managed with this conservative approach. The mother has since passed on, but her son has maintained the account to this day. Although younger, he wasn't about to change from a stable conservative investment to the risk of the stock market. The son's account is now known as the IMS Income Testimonial account. The daily performance is representative of all IMS income accounts and is updated daily at imsadvisor.com. How could a conservatively managed account perform this consistently? There are two main reasons. The first is that IMS income accounts are never invested in the stock market, but in high-yield mutual funds. The high-yield market is risky, but it's much less volatile than the stock market. The second reason is that the accounts can be invested in the money market to reduce risk. Defensive periods are determined by an algorithm that was developed for the mother's account back in 1997. The algorithm signals the sale of high-yield securities after periods of negative performance, and signals the purchase of high-yield securities after periods of positive performance. The algorithm only evaluates the recent past, and, like all of us, it never knows the future. It can't predict what the high-yield market will do. As a disclaimer, past performance is no guarantee of future performance, and no assurance can be given that an account will avoid the losses that can result from investing in the high-yield bond market. Also, know that the management company believes the future rate of return may be less than the historic rate of return. This is because interest rates have declined to such low levels and are likely to move higher during the coming years. A period of rising interest rates could serve as a headwind to large gains. That said, there are two important factors that are positive. The recent annual dividend return of high-yield securities is about 5.5%. This is much higher than other conservative investments, such as certificates of deposit, currently about 2%, short-term bonds, currently about 1.5%, and the money market, currently about 0.1%. Historically, IMS income has been invested in the high-yield market about 85% of the time. Generous monthly dividends have been the mainstay of the program for over 18 years. The second positive factor is easily overlooked, but it may be just as important as the generous dividends. Conservative investments are designed to provide a floor of protection during damaging bear markets, such as those that have occurred in the past. But another characteristic of conservative investments is that they act like a ceiling to prevent large gains. It is here that the IMS Income Program stands out in contrast to other conservative investments. The IMS Income Program gained 22% in 2003 and 42.3% in 2009. Why? Rebounds from the two bear markets set the stage for these large increases. The greater the bear market, the greater the rebound potential that builds up. In review, the IMS income algorithm is designed to be protective during bear markets, but, as important, it is designed to take advantage of any subsequent rebound. The IMS Income Program offers an option to investors who may wish to unlock the potential of their conservative investments.